Good morning, everyone. It's 23rd March 2017, and welcome to another episode of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So let's have a look at what Nifty did. So here we have in this market profile chart, the tick is missed from 9099 to 9130. There was a spike there. So gap down open tries to push higher, so that we consider that as a spike or we ignore it. But obviously it was traded, and that's why that high got printed. And then in the B period, it was unable to push even through this, which was recorded even through this high. And finally, C period breaks down. We get an inside bar in D period. E period breaks below the D, and F pushes higher. It's not able to cross the C period high, but still, as it has gone above this inside bar high after a narrow range bar of E period, there is all chance that we might visit this B period open. So I had sold and I waited for this level to come. So I hit the stop loss, went long here, and by the time it reached to this 9770 high, I recollected that one, that it was day mid as per this 9130 high. So it was day mid, and it was we had already broken the overnight low. So it was like a very quick decision, and I said that okay, I'm flipping. So by the time I could explain that time, because I had to trade as well, so I just flipped there. And the reason was this, that uh, the day mid was there, so the auction might tend to look above the day mid and fail. And this high was there. This also happens to be the morning swing. I will go on the Renko, and that time I'll show that. So finally, that short worked out. It tested the patient for an hour, I think, and then finally broke down in the L period. So we have spike down and a poor low, and the close at the lows. So today we need to see what we do. Can we push above this balance POC or not? Because the POC stayed higher because of the last hour spike and could not shift down. We'll go through the hypothesis, but let us first go through the 3-minute chart. So here we can see this spike, and then we get a balance, a break of that balance, and then it balances lower. So there we get a spike down, and then we get a no supply, no demand and no supply together. And when that is crossed, there is no supply at all here. The volume has completely dropped, and we get the first push bar here, and finally that helps to build this move. The second spike came in here, and finally the third spike goes into the day mid, fails, next time goes and tests, and then this fall emerged. So now this selling is looking very mechanical, because going up and down into a channel. So we might take out this first and check what lies above, and otherwise we might test this zone. the initiative selling zone and the balance higher to see if there are any sellers there or not. Now on the 15 minute, uh, we have the same thing. We have that spike. Then we create a balance within that body and then break down. While breaking down, now what happens is, generally what everyone watches is these delta bars, and there you can see positive. It's not about the positive delta, because like yesterday, uh, while falling the delta was positive, but where do you buy? Do you buy, you see the first positive delta bar, do you buy here because there is a reference here as well, then there is a reference here as well, and then now you have a delta divergence because the delta rising and the price falling. Even if you buy here, there is a reference, and then you get beaten down, it falls. Now in hindsight you can say that okay, now this is the divergence, but there the delta has already fallen. So this move created higher. Obviously there will be a move, we cannot ignore that there won't be a move, and that's why yesterday I was like talking that if the 9100 writers can step in, we can see a move towards the previous day's point of control. But that is where the move might end. The move might not continue because it has already lost its legs. But as it is not able to find sellers lower, that's why it's going higher. So here on the momentum, we know that the delta was completely negative. Today in the open itself, we have a huge negative delta. Here there is absorption and a minor positive. So this minor positive, where can it create a move? Maximum till the previous day's range. When it starts creating positive delta into this range, instead of here, if it goes here and starts creating positive prints, then we go long and hold on to the longs if anyone has created from here. But there, the moment it reached there, we started seeing negative prints coming in. Again the same thing on the delta, which everyone would see. Here there is positive delta, there is no sign of selling there. Then the same thing when it comes back down, continues 4 bars of positive delta on the normal delta bars. But if we see here, the first bar had a lot of buying, then the buying slowly started withdrawing. So that means all the selling is absorbed, or when it's falling, somebody is covering their shots, not necessarily that this is a fresh long setup. So here what we have to see is, at the open today, if we can get positive prints, if the open can hold on, and then we are able to make a few higher highs on the shorter time frame, then we think that okay, we'll be able to push into this POC as well, 9130 kind of zone. But if we are not doing that, then uh, again a bit of selling pressure comes and we'll go and break these lows. So now let's have a look at the Renko. So this is that spike, goes into the previous day's point of control, almost there, and then falls back down. Now, if you see this, we had drawn a balance here. So it looks above that balance. You see, this is the VH. Yesterday it had looked below and went above. Today it looked above and failed. And this is the value of having micro composites. Micro composites, it's not about automation to have uh, to one box and then keep on holding till eternity. So just like today when everyone was watching that the guesses for the levels were coming, I was surprised that why is everyone not remembering the earlier digests, and why is everyone not looking at the references instead of anticipating too many things. And that's why, like, the reason to discuss all this is that there is no way that without observation we'll be able to get the trades right, because it requires observation and then, like I flipped today, that kind of vigilance, because the market is not going to care whether we are in a right or wrong position. It's us who has to act immediately when we see something. I would have missed that if that would not have striked exactly at that time. I would have missed that trade and maybe would have got stuck into a bad trade. And that's a part and parcel of trading. That's not a problem, that you get stuck at times. But when that is happening, our mindset should be focusing on all these levels, because they play a very vital part during the day. Because this level might stay and may not be visited for some days, but that does not mean that this level becomes irrelevant. These levels would help, because now what happens is, when you're looking at your charts, you tend to always look on VL, and any prominent POCs. But it's the structure within which might be playing. It's maybe some congestion zones that might be playing out. So each level might have its own story. And that swing high which I was talking about is this 9098.35. This is that zipper high. And again, the same thing I've always been saying, that they tend to visit this level and check if there is any interest there. So it comes there, creates a zipper. The break of zipper is a confirmed sell. So though I am anticipated here, but the break of that zipper is sell, and that's why you can play in this even a 7 point range. You can buy and sell, and that is your stop loss. You don't need filters. You don't need anything if the levels are right. Because if you are keeping 20 point stop losses, we are never going to make it as a day trader. So finally, we get this impulse, which obviously this impulse is not tradable. The tradable part is the breakdown here, and goes into this, creates this zipper. Break of this zipper is a buy. So goes from here, goes into this, and again this is a sell. Now gets confused, and finally a breakdown, impulse, pullback, impulse, and the move is done. And that's why I was like waiting, that if we can extend below this, then fine. But for that we have to wait for this to go. We cannot judge before that. But the day was ending, so there was no choice but to think that we might not continue today and might continue next day. So now what we can expect for today, let's have a look. So let's draw this as an important reference, and let's draw this as an important reference. So I'm expecting a open somewhere into this zone. So around 9906 907068 zone. If we open here, try to push higher into this, fail, and get back into this LVN. If we can get any buying interest into this LVN, then push higher this time and go into this zone, into the previous days, into the previous days low, and then reject from there and try pushing lower, or else move higher into the 9132 zone and then make its move into the 9145 zone. If we open if we open somewhere here also and come down, then also we'll continue with that move. So now I'll be like showing the move on the downside. So either we open above and start falling, or we open below and start. So it would continue like this, that push through this into this LVN, try to push back up, and then finally push into the 9036, which is the monthly VWAP as of now. So push into that zone, and if find buyers, then immediately bounce back into this LVN zone. And again, if we find buyers, then continue with that upper move. Anything up below this, and we go keep drifting lower till we can seek buyers. So that is the likely scenario for Nifty. Now let's have a look at the bank nifty chart. So on the bank nifty, open drive down, uh, compresses, we have a failed auction. And when I talk about failed auction, it's not after the confirmation of the IB, because this huge IB we cannot wait. So fails here, enters inside, is like it has temporarily failed and might probe. Because it's emotional selling, what we consider, we wait for the revisit of 50% of this range. So it goes into that, spikes up, fails here. Now this I missed because of that nifty, and I was saying that this was a better trade, because this had given confirmation earlier only that it went above, failed, and J period broke the low. So H period low and I period low both are broken up. A very neat and clean confirmation of going and breaking this low. So finally, the L period breaks down, M period goes into this reference and pulls back a bit and closes. So overall, balance, if we can see, with anomaly here. So anomaly and extension handle we have, and a prominent POC. Now let's have a look at the 3 minute chart. So on 3 minute, we have a huge balance happening, a break through that balance, create another balance, and then fall from that balance. Now, here the buyers were stepping in, but they failed to hold on and finally gave up here. So this is where the selling emerged, and finally the huge cover orders coming in here. So overall, almost balanced on the inventory. Let's have a look at the 15 minute. So here a very compressed balance goes above, creates another balance just past the mid and fails, and then we know that it will move away from the mid. So here see the buyers were stepping in, but the moment they failed, they ran for cover. Now let's have a look at the Renko. So not tradable till almost here, and then uh, impulse down, zipper, impulse down. Now this impulse down fails. By the time we get confirmation, we'll be at this already near our cost. So very dicey trade setup. Then we go higher above, create a zipper above the day mid and fail. So this was a nice one, that we break that zipper, we go short, and this again gives another failure, a better confirmation to sell below this zipper as well. So we can add here, because we know that now we'll get the likelihood of getting a zipper down or impulse down is much higher when we have two zippers between a minor impulse and then it's failing. So we get that impulse down, pull back, impulse down, gets into a zipper, and then slow grinding move, and finally again another impulse down. So overall, we have created a lot of volume into this day mid zone. So that becomes the VPOC, volume POC as well. So now let's have a look what we can get for today. So we'll consider this as a point, and this LVN zone, and this zone as important zones. So open into here, try to push higher into the point of control, come back into the LVN and try to push higher above previous day's high, or fail into this zone and start coming back. So from here also it can do the same. So push into this, so lower balance, this is almost the lower balance point of control, this one. So try to come there. If gets accepted, then push into this uh, 20,790 and maybe bounce back from there. If unable to do so, then push lower into the 20,700 zone, because being the weekly expiry, they would like to either keep it within this broader range. So if they keep it into this broader range, then they might get a nice they might get an expiry near 2,900 zone at the POC centered, and might consume all the premium. So that can be another scenario as well. On the upside, if it pushes through this, then we go into the previous day's range and try to reject from there, or else push into the volume point of control of the previous day. So that's all for today, and catch you all during the day, and have a profitable trading day ahead.